Ever wondered what an ETF is and why it's become a hot topic among investors? Let's break it down. An ETF, or exchange-traded fund, is like a basket filled with a variety of stocks or bonds. Imagine going shopping for groceries. Instead of buying each item individually, wouldn't it be easier to buy a pre-packed basket that includes different items you need? That's the beauty of an ETF. It offers a variety of investments all in one package. But why are they so popular? For starters, ETFs offer diversification. Instead of putting all your eggs in one basket, you get to spread your investments across a range of assets. They also provide flexibility, as they can be bought and sold throughout the trading day just like individual stocks. And don't forget about affordability. Since ETFs represent a collection of assets, they can be far more cost-effective than buying each asset individually. Now that you have a basic understanding of what an ETF is, you might be wondering, how do you go about building an ETF portfolio? Building an ETF portfolio might sound daunting, but it's a straightforward process. Let's break it down into manageable steps to make it less intimidating. The first step is to understand your investment goals and risk tolerance. Are you investing for long-term growth, or are you looking for short-term income? How much risk are you comfortable taking on? Your answers to these questions will guide your ETF selection. The second step is to research various ETFs. This step involves understanding the nature of ETFs, their performance, and the sectors they cover. ETFs are traded like stocks but represent a basket of securities, such as stocks, bonds, or commodities. They allow you to invest in a sector, a market, or even a country, without buying each individual security. There are many resources available online for ETF research, including financial news sites and ETF provider websites. Look at the ETF's historical performance, its holdings, and its expense ratio. Remember, past performance is not indicative of future results, but it can give you an idea of how the ETF might perform under different market conditions. The third step is to diversify your portfolio. This means investing in different types of ETFs that cover various sectors, geographic regions, and asset classes. For instance, you could invest in a mix of ETFs that include US stocks, international stocks, bonds, and commodities. Diversification helps to spread your risk. If one sector or region performs poorly, your other investments can help to offset these losses. The final step is to monitor your portfolio and rebalance it as needed. This involves selling some ETFs and buying others to maintain your desired asset allocation. Rebalancing ensures that your portfolio continues to align with your investment goals and risk tolerance. And there you have it, a simple guide to building your ETF portfolio. But what are the key points to remember? Building an ETF portfolio is a journey, and like any journey, it's important to remember the key points. Let's take a moment to recap what we've learned today. First and foremost, understanding your investment goals is the foundation of building your ETF portfolio. Whether you're aiming for short-term gains or long-term growth, it's your goals that guide your investment decisions. Next, researching ETFs is crucial. It's important to delve into the details, examining factors like the ETF's performance history, its underlying assets, and its expense ratio. The more you know, the better equipped you'll be to make informed decisions. Finally, we discussed the significance of diversification. By spreading your investments across various ETFs, you can mitigate risk while potentially enhancing your returns. Diversification is a tried and true strategy for building a resilient portfolio. Remember, the world of ETFs is vast and varied. With the right knowledge, you can navigate it successfully and build a robust ETF portfolio.